What's up? I'm Dan Fredenberg, and this is another Chance Encounter.
Hey, what's up? I'm Dan Fredenberg. I'm a commercial real estate guy. I'm from the internet. We're seeing more properties like this being built in front of a house that's going to be torn down soon.
I understand that there are power lines that are getting kind of close.
What's up again? This is Dan Fredenberg, and that there is a commercial real estate building.
I'm joined today with Dr. Alex Tan. How you doing today, Dr. Alex?
Doing great, Dan. Thank you for having me on.
Awesome, awesome. You prefer Alex?
Alex is good. Alex is
Alex
good.
is
I'm good
good.
with that.
Great. Good stuff, good stuff. And I gotta let you know one thing though, Alex. I am very excited today because I have my very favorite audience member joining me today. And why is my favorite audience member joining me today? It's because this is a chance encounter where I interview commercial real estate syndicators, buyers, sellers, investors, operators, all that kind of stuff. Now, why would I do such a thing? Well, part of it is because I know that if you want access to private deals, which is actually most of the syndications that are out there, you have to have a prior substantive relationship that's documented, and that's what we're doing. You still also have to know if there's any overlap between you and your peers, figure out if you can do business with each other. So that's what I do in these episodes, and I make sure that you learn to effectively communicate on the subject of commercial real estate and find out how my guest is involved in deals. But before we get into too much detail about that, Alex, do you want to say a couple things about yourself before we get started?
Yeah, well, I got into commercial real estate about 2018. I started becoming a limited partner and for did that for a few years. And in 2021, joined a mastermind, MIH mastermind, and also a Jake and Gino group. And from there on, last year in 2022, we completed three GP deals, got into five JVs, and hopefully way more this year.
All right, beautiful. That's great stuff. And the next section is going to get all messed up because I'm using a different camera and I forgot all about that. So if I hit that and then I hit add existing and then I hit that one right there and I hit OK, there I am. But now I'm on top and now isn't that fun? Now I'll move this down here and voila. The distinct motivations. It's the first part that we go through in these interviews. Before I do that, I say, but wait, check your eight. And Dr. Alex, I don't know if you can see through the camera lens and into the audience's device, but if you make a clock and at 8 o'clock, you should be able to see if there's a red subscribe button, which is really, really bad, or the gray one, which means they already clicked. And it's just a joke I like to do at the beginning of all these. But the five distinct motivations among commercial real estate investors, I've found that there are many different distinctions. We're all unique, but at the same time, I found you could really still categorize their motivations based on these factors. So the first
Mhm.
one that is for some people. Some people already have a portfolio of assets, and that is how they make ends meet. And if that's the case, you never want to sell them unless it's a real dog. But what you really want to do is you want to make new acquisitions every time inflation is eating away at your purchasing power. Or if there's an asset crash, you might be looking to buy at a discount. But basically, that is not what I'm up to. What I am up to is actually trading time directly for wealth. My background is in CRMs. I've owned a CRM agency since 2011. I worked for web.com, and the fancy thing about that CRM is it also accepts credit card orders. So it's not just emailing all your lists. But the problem with having a great job is you have a high salary. And if you have a high salary, then you pay more in tax than anybody else. So it hit me, how do I pivot where I'm getting rewarded in the form of deployed capital, aka equity, instead of paying half of it off to tax? So that's my motivation. But a lot of people come to commercial real estate because they understand there's a bunch of money in it. And really, what their motivation comes down to is they want to take control of their schedule. Maybe that means they actually want to fast track their retirement, but it's also possible that they just want to work fewer months per year, fewer weeks per month, or something like that. So that's some people. But the next two groups, they're not looking to scale back. They're looking to ramp up, and they're never going to stop ramping up because they're so ambitious. They want to buy their entire hometown. They want that generational wealth. They want to make sure that their great grandchildren never have to hold a day job. And that's why they're going to be hustling into their 90s. Just like the last group, they've also got that drive to hustle into their 90s, but that's because they've picked a sector of society, or maybe it's the environment, or maybe it's animals. Regardless of what it is, what they want to help, the group that they want to help, it's going to take a big financial backing. And that's why they go through all the hassle of making a new commercial acquisition. After all, it could take months or more. So, Alex, of those five different motivations, what combination of those really jumped out to you?
I would say the last two.
Hmm.
For me, it's the reason why I do what I do, whether it's in the medical office or virtual assistant agency or the real estate, is because I want to do the best that I can for our family and future peoples that are going to join our family, right? Any descendants and whatnot, to have that generational wealth. And the reason why I say that last one is because I like to support communities for that are out there to who are really supporting it for a good cause, right? One thing that I like is supporting underprivileged kids. Kids who maybe are not from the best part of town, like myself. I didn't grow up in the best part of town in Oakland, California, but we got to where we are because we hustled, you know. And whether it's kids that are underprivileged or entrepreneurs coming out of underprivileged areas who didn't have the coaching, who didn't have the mentorship, it's going to allow me to give back to them in what it's something that I never got. I believe that if I got the guidance that I would have had, maybe some peers did, my career will be a lot further along. But knowing what I know now, you know what? It's time to give back to the teenagers, the younger kids, the new entrepreneurs who are really trying to hustle and make it.
I love that because I've been an entrepreneur since I was a teenager, so I definitely realize that financing has established a barrier to entry in entrepreneurship in all its forms. So basically, the finance industry is going to get a piece of the action regardless of what you're doing, and I'm not sure that helps innovation at all. It actually keeps a lot of people out of it. But
Mm-hmm.
the next question I have for you, it's what I call the tolerance for risk assessment. And the reason why I do this is because a lot of people come to commercial real estate, but I need to make sure they actually understand, sure, there's lots of money involved, but there are all sorts of risks. So to understand that, I ask this question. It's a fill in the blank question. There are many popular investment asset classes, but I think blank is too risky. What's too risky for you, Alex?
Um, Too risky for me is anything that people get into that they don't have a complete understanding of how it works. See, because if you understand how it works, it doesn't matter if it's stocks, bonds, right, commercial real estate, resident single family homes. If you have a good understanding of how it works, then there's always a certain amount of risk in everything, right, Dan?
Hmm.
Even in the safest class A, B apartment, multifamily, you're going to have some risk. Industrial, you're going to have some risk as well. But the riskiest thing to do is not knowing enough about it, about what the terms are, what's good, what's bad, timing, strategy. If you don't know any of that, then the most unrisky investments could be very risky.
Yep, I love that. That's a fantastic answer. So let's get on to the rules then. So when it comes to commercial real estate, one of the things that hit me is when you're getting trained about this, everybody's an investor. It's this person's an investor, that person's an investor, but it doesn't tell you enough information. And in every episode of Chance Encounters, I pull out the Dan Does Deals commercial roll die, and the magical effects are kind of weird looking on it. It has the 6 different core competencies in a commercial deal, and in every episode, I go through all 6 sides in about 2 minutes, and that way you understand how my guest fits into a commercial deal. But if you want your own copy, it's absolutely free. I don't even ask for your email address, which from a marketing perspective is the worst thing you can possibly do. But again, I want you to be able to print out this PDF. So you just go to dandoesdeals.com and you can print out your own copy. You can share it with your friends and family, because I want you to be able to express this stuff confidently. So let's get going. First person I want to talk about is the repositioner, who's an acquisitions person. So acquisitions people, it's one thing to just be able to get these properties under contract, but I call them repositioners because they have to do something extra that's kind of fancy. And the fancy word is underwriting. And what that means is doing the arithmetic, doing the math, making sure, first of all, that the building is actually even making the amount of money that the seller or broker is claiming it is. But I call it a repositioner because they're thinking, how can I change the property or how it's run to find some upside? And the first place they're going to look is they're probably going to have a network of financiers, banks, loan sourcers, originators, stuff like that. Financiers are people who deal with paper and money and nothing else. Maybe they are doctors and they have a W-2 on top of it, but main thing is that they're not really active in operations. And if you can get more advantageous lending, then that automatically means that your business is more profitable. So that's why the repositioner is looking for them. But traditionally, people think of the operations. They stop those Benjamins from going down those toilets. Now my green is all disappearing here. But anyway, there's more to operations than just unclogging toilets and collecting rent and mowing lawns and doing different maintenance. There's also a marketing component, which is one of my fortes, and that makes sure that the vacancy rate stays low, even if you're outsourcing your operations to a third party. You might find yourself having to fire your operations team and do your own leasing agent work. But there are a few other things like that. I also help with automation and what like that. But the problem with commercial real estate is it's very competitive, so that might not be enough upside for the repositioner. So the next place they're going to look is the contractor team to do a value add, or as other people might call, renovations. And the idea then is that the next tenant will be happy to pay more in rent than the previous one because the place is actually nicer. But of course, you can spend so much money on contractors that it's a little bit dangerous, especially if you're like me. See, I'm from the internet, so that means I really need a local. I need boots on the ground who can be there in an hour or so, because that's not going to be me. I'd still be stuck at the airport. But when the repositioner has assembled this team and they turn around to the financier and they say, hey, I got this 350 unit apartment complex worth tens of millions of dollars. You don't happen to have, say, tens of millions of dollars you want to lend us, do you? And the financier is going to have one big burning question in their mind that I haven't addressed yet, which is, who is your sponsor KP? And what's that all about? Even if you've taken a course from a guru on commercial real estate, they may have glossed over this part. And so the scenario, the way it works on fitting them in is, if you've got a bunch of buddies, let's say you're a physician and you and your pals want to take over an apartment complex. If you want to be eligible for a commercial loan, you have to have somebody in the fold who already owns a similar asset, or else you're just plain not eligible. You also need a certain amount of liquidity, and you also need a balance sheet among the ownership team of at least the amount of the loan. But if you have all those pieces, you got yourself a commercial real estate deal. So Alex, as far as your core competencies go that you're looking to bring to the table, everybody has some sort of investor relations roles, and everybody has some degree of repositioning roles, because you have to underwrite every deal anyway. But where do you see your most likely contributions to your next deal?
A lot of our contributions are either asset management and marketing as well.
Hmm.
I do marketing for other doctors, so we know some of the marketing ideas that are out there. Also, raising capital, it's something that everyone does, right? So that is something else that I do. And then also we play a role in KPs as well with the key principles. So those are a few things that we like to do.
All right, beautiful. So then the next question has to do with the ideal property. And when full-time syndicators, investors, and all that kind of stuff are talking about an ideal property or a buy box, we're really asking about three things. The first one's geography. Where is the property? So which state, which county, possibly even which neighborhood, okay? Because it all matters. Second one is going to be the size, okay? So we're talking about multifamily right here, and just like several other forms of commercial real estate, it's determined by the unit count because you're going to have different groups taking over, say, 15 unit apartment complexes compared to the ones that are like 350 units. So that size definitely matters. If you're in other forms of commercial like warehousing or industrial, it'll go off of square footage, but that unit count we're going to need to know. And the third one is class. And unfortunately, they use the same word quite often for two different things. And the first meaning of class, it has to do with the condition of the building. So is it really, really old, or is it up to date? Is it beat up, or is it in good shape? Is it no frills, or does it have all sorts of luxuries and amenities in the best all the best things that you can get? That's one meaning of class. The second meaning of class is also called area sometimes, which I think is a little bit more specific. But what they're talking about when they say the area, it's what are the school districts like where the property is located? What's the crime rate like where the property is located? And both of those two different meanings of class are rated the same way as in grade school, where the top is A plus, and then A, and then A minus, and then B plus, and so on. So, Alex, as far as you and your team goes, what's your sweet spot as far as if somebody in the audience has something they want to find a good buyer for it? What's an ideal property look like for you?
Yeah, we like properties in the South, Southeast, and the Midwest. Those are the areas that we focus in. Definitely B to like B minus at the lowest to B plus properties. Unit counts, if it's a JV, I'll say anywhere between 15 to 30, 40 units. With the syndication, definitely 50 to the 150 to 200 range.
All right. So and then right, you got the area, you got the geography. Good. We're next. So the next question has to do with people then, as far as who you're disproportionately well suited to help. And just to box that in a little bit for you, it's fantastic that commercial real estate's so multifaceted because that means we're all eager to meet each other, help each other, build more teams, and all that sort of stuff. But at the same time, because of our unique skill sets, we're going to be able to help some people more than others. Me personally, because of my marketing background, automation, all that kind of stuff, it's the sponsor KPs are the people who I'm generally most eager to work with. These days, I'm also interested in meeting more locals all over the place. But Alex, how about you? Who would you really like to help? And if it's other physicians and whatnot, then that's like beginners is a good way to say that. If you have any 506B deals go, it's a bad idea to entice investors, whatever that means. So if you have any like candy or chocolate bars or something like that, don't wave them in front of the camera. That's very enticing.
No, I mean, most of the time I like to help. I like to work with sponsors, operators, but then also when you mention other doctors, I look at myself and how I was started 2 to 5 years ago, and I can relate to some of the doctors' pain points and why they need to be investing, right? Like you mentioned, they are good income earners and have a hefty tax bill where they can use some investments that have less taxes or help them save taxes in the long run.
I love it. I love it. And if somebody is watching and they want to know how to reach out, me personally, I got a distinct last name right here, so I'm really easy to find. LinkedIn is the best social media platform to reach out to me. But if you scan this QR code with your phone, that goes to the FAQs page of 506 Me, which is a platform I created to document your relationships with your investors for 506B compliance. The fun thing is that also means I have a service to be your chief compliance officer for a very low price. But Alex, how about you? What are the best ways to reach out?
People can usually send me a chat on LinkedIn. We're really active on LinkedIn, Facebook, IG as well, but usually LinkedIn is going to be the best.
Okay, and what's the handle? Or sorry, well,
They could just search Dr. Alex Tam, and I'm really the only one that pops up. So
okay, great, good. So
yeah,
then the only other thing that I have left then, it's actually not for you, Alex, it's for you in the camera, which is if you this is like a public service announcement and like I know I don't have a license for it. If you've been noticing searing pains in your eyeballs, like migraine like symptoms, I personally think that it's because there might be a big, hideous, like just awful red button under my hand. And if you want to get rid of it, you just click on it. It's the one that says subscribe. And you know that you're okay if it's gray, because that's what I call the gray button of tranquility. The gray button of tranquility has a magical power. It means that YouTube will start to pay for these videos instead of me. And I want that. But what it really means is that these videos might show up on your list of suggestions. You can go ahead and ignore those suggestions because I just appreciate the fact that you spent this time with me. Just like Dr. Alex, I appreciate you joining me today. This has been a lot of fun.
yeah. Thank you so much, Dan. Really appreciate it.
Awesome. Thanks. Make sure you 506B me. Any syndicators, make sure you 506B me.
Hi.
Oh, hey, yeah, here's my code. You got your QR code scanner? Okay. Yeah, oh, yeah, just hold it right in the square there. Okay, cool. And now you hit open in browser.
Okay.
Okay. Are you already logged into 506BME?
Yes.
Yeah, okay, cool. Yeah, so there's my video. So now I'm already on your watch list. So when you get back to your hotel, you can find out what my core competencies are and my level of sophistication. Sound good?
Yeah.
I love your hat. Real estate's a scam. That's really funny.
Yeah.
Nice meeting you.
You too.
506BME, everybody.